Get right to the floor show. Two great experts here. Steve Lakely, BlackRock Global co-head of iShares fixed income ETFs, and Great Hill Capital chair trader Tom Hayes. Steve, looking at how the Treasury markets reacted, we are seeing such high yields. I mean, for the 2-year to punch through the 5% level indicates that at least the traders in the markets feel that the Fed is not going to cut rates May, June, July.
Yeah, so we went from, if you recall, and you did talk about this, Liz, we went from the beginning of the year where we were expecting something like 6 to 7, and now we're pricing in a little over 1.
Right.
And now that's even being talked about. And so, yeah, we've moved quite a lot. And I think, the path of inflation was always going to be uneven. I think it is now hit sort of this bumpy territory, and it's diverging between goods and services. And so that's what's creating a lot of the swirls, trying to understand, well, how do they get services inflation down? Because they were somewhat successful at getting goods inflation down. So that's where the battle's being fought right now.
Tom, does it surprise you that the equities market is holding up pretty well in this last, let's call it 55 minutes left to trade? Because earlier lost nearly all of the gains when Powell said, you know what? The progress on inflation has stalled and slowed.
Yeah, well, we were on last month and we said expect a 3 to 8% pullback. We actually got 4.3% peak to trough in the S&P futures. And on the second hedge, which was semiconductors, it actually corrected over 9%. So I think what you have here is a little bit of exhaustion in the selling, a lot of geopolitical fear. We actually took off half of our S&P hedge this morning, and we're keeping our semiconductor
hedge. Okay, I need you to
on.
Explain for our viewers who don't know what it means to be S&P hedged.
Yeah, so we had put spreads on the S&P 500, which we talked about last month, as the market fell.
Meaning bearish.
Meaning bearish. Those go up in value. But we were long 98% of the portfolio. So we had 1% in derivative hedge, long put spread on the S&P, and 1% on the semiconductor index. We are keeping the semiconductor hedge full tilt.
But the risk tolerance some people have, Steve, is not as hot and high, perhaps, as Tom and some of the other younger whippersnappers out there. And so when you look at the Treasury yields that we see right now, particularly on the longer end of the curve, I mean, now the 10-year yesterday was up something like 12 basis points. Do you lock in some of that yield right now, sort of longer term, with some of the cash that maybe people have sitting on the sidelines and aren't in Treasuries yet?
Well, and that's the point. We're not going to be able to, or few would be able to actually time the top in rates. And so what we've been advocating is there's something close to $9 trillion sitting in money markets. For fixed income, our data shows that most investors are pretty significantly underallocated because I think in large part everybody did move to the front end and they were waiting. But now it's time to start layering in. People dollar cost average into equities. There's no reason why you shouldn't start dollar cost averaging into bonds and get the portfolio right size, because bonds are a good diversifier for risk assets over most cycles.
And there are a lot of ETFs where you can pile into certain types of bonds. And I'm not just talking treasuries, you're talking fixed income in many regards, right?
Yeah, and so as an example, we traced out 3 different scenarios. So if you are in inflation's going to persist, it's going to be challenging to bring it down. And then if you're in the camp where you might think that even a hike might be on the table, you can buy very short-term stuff like SGov is a 0 to 3 month T-bill fund. You have STIP, which is a short duration inflation fund, a TIPS fund. If you're in more of a bullish camp or a soft landing camp, you can just buy the market. So you can buy the ag, you can buy a universal index and high yield as an example. So there are a lot of ways to play this. And of course, if you're in a hard landing camp, and some people think just by definition higher for longer may not end well eventually, then you can buy long duration.
Tom, what are your most active positions? As we hear so many different types of scenarios, soft landing, no landing, hard landing, equities can continue to stretch out this rally?
Okay, so we did 2 things. We covered half the S&P hedge this morning, and we went long TLT bonds. Why? Because everyone's focused on cuts. And what the news was in the last week was from the Fed minutes. They're going to cut quantitative tightening in half. So now they're putting $95 billion of supply on the market every month. Yields go higher. They're going to cut that in half to $45 billion. And they said, quote unquote, in the minutes, soon. 45 billion of less supply means there's going to be a greater bid in bonds, compression in yields. We like that. As far as equities, we've got 2. One is brand new called GXO Logistics, one of Brad Jacobs' companies. He just wrote a book, How to Make a Few Billion.
Yeah, we had him on the show. He started like 38 different companies, all becoming billion-dollar market cap
Yeah,
companies.
so he made $4 billion for himself. He made tens of billions for his shareholders. If you had invested in URI, United Rentals, when he went public, you would have made 50 times your money. $1 million becomes 50 million. If you had invested in XPO Logistics when he got involved in 2011, you made 52 times your money. 1 million becomes 52. Now we're doing GXO Logistics, which was spun out of XPO. It's down 50% because they do warehousing, they do e-commerce fulfillment, reverse logistics. And the feeling was that the goods demand went down. They get paid per units. The business kept producing. Services demand went up after COVID. Now it's balancing out. Goods and services are equal. They're going to recover. They're going to have the beneficiary. They only have 2.2% of the market. Huge room for expansion. And you know how Brad works. He does a lot of roll-ups. He does a lot of acquisitions. They'll grow high single digits organically, double digits inorganically, acquisitively. We like the opportunity there.
Okay, so, you know, you got to have a strong stomach for some of this. We thank you both very much, Steve and Tom.
Thank you.
Thanks, Liz.
Busy day. Okay, Dow is up about 139 points.